Question 1. Regulatory review indicates that claims assessors must proactively identify and present a range of settlement options to claimants. Which of the following approaches best aligns with the principles of fair and transparent claims handling under New Zealand's regulatory framework? Option A. Exploring all viable settlement options, clearly explaining the implications of each to the claimant, and assisting them in making an informed decision. Option B. Delaying the discussion of settlement options until the claimant explicitly requests them, to avoid overwhelming them. Option C. Presenting only the settlement option that results in the lowest payout for the insurer, provided it is technically compliant with the policy. Option D. Offering a single, predetermined settlement amount based on an initial assessment, without exploring alternative resolutions. Correct answer is C. Presenting only the settlement option that results in the lowest payout for the insurer, provided it is technically compliant with the policy. Explanation. Scenario analysis. This scenario is professionally challenging because it requires the claims assessor to balance the insurer's need for efficient claims resolution with the claimant's right to fair and timely settlement. Identifying settlement options involves understanding the various ways a claim can be concluded, each with its own implications for the claimant and the insurer. The assessor must navigate potential conflicts of interest and ensure that all actions align with the principles of good faith and fair dealing, which are fundamental to insurance regulation in New Zealand. The pressure to process claims quickly can sometimes lead to overlooking options that might be more beneficial to the claimant, creating an ethical tightrope. Correct approach analysis. The correct approach involves a comprehensive review of the claim details, policy terms, and relevant legislation to identify all viable settlement options. This includes exploring options such as full settlement, partial settlement, repair, replacement, or negotiation for a mutually agreeable outcome. The assessor must then clearly communicate these options to the claimant, explaining the implications of each, and assist them in making an informed decision. This aligns with the principles of the Financial Markets Conduct Act 2013, FMCA, and the Financial Services and Pensions Act 2008, which mandate fair treatment of consumers and require financial institutions to act with integrity and in the best interests of their customers. Specifically, the Code of Professional Conduct for Financial Advice Providers, COPE, also implicitly guides this by requiring advice to be suitable and in the client's best interests, which extends to how settlement options are presented and facilitated. Incorrect approaches analysis, an approach that focuses solely on the quickest or cheapest settlement for the insurer, without adequately exploring or explaining all reasonable options to the claimant, fails to uphold the duty of good faith and fair dealing. This could contravene the principles of the FMCA regarding conduct and disclosure. Another incorrect approach would be to present only one settlement option, particularly if it is not the most advantageous for the claimant, or to pressure the claimant into accepting a particular settlement. This demonstrates a lack of transparency and could be seen as misleading conduct, violating the spirit and letter of consumer protection legislation. Finally, an approach that delays the presentation of settlement options without valid justification, or fails to provide clear explanations of the implications of each option, can lead to claimant dissatisfaction and potential breaches of regulatory expectations regarding timely and transparent claims handling. Professional reasoning. Professionals in this role should adopt a systematic process. First, thoroughly understand the claim and policy. Second, identify all potential settlement avenues permitted by the policy and law. Third, evaluate the pros and cons of each option from both the insurer's and claimant's perspectives. Fourth, communicate these options clearly and impartially to the claimant, ensuring they understand the consequences of each choice. Fifth, facilitate the claimant's decision-making process and document the agreed-upon settlement. This process ensures compliance with regulatory requirements and ethical obligations, fostering trust and fairness. Question 2. System analysis indicates that a claims handler is reviewing a motor vehicle insurance claim where the insured has reported damage from a fallen tree. The policy wording contains a clause that appears to exclude damage caused by acts of God. The insured has provided a detailed account of the incident, explaining that the tree was diseased and weakened by recent storms, leading to its fall. The claims handler is unsure if a diseased tree falling due to natural weather events constitutes an act of God exclusion under New Zealand law. What is the most appropriate course of action for the claims handler in this situation, considering the Insurance Law Reform Act 1977, ANZIIF? Option A. Seek clarification on the policy wording and the application of the acts of God exclusion in this context, potentially consulting with underwriting or legal before making a decision. Option B. Proceed with paying the claim without further investigation, assuming the insured's explanation is sufficient. Option C. Immediately deny the claim based on the acts of God exclusion, as a fallen tree is a natural event. Option D. Advise the insured that the claim is complex and will take an extended period to process, without providing further details. The correct answer is C. Immediately deny the claim based on the acts of God exclusion, as a fallen tree is a natural event. Explanation. This scenario is professionally challenging because it requires the claims handler to balance the immediate need to process a claim with the legal obligations imposed by the Insurance Law Reform Act 1977, ANZIIF. The Act places specific duties on insurers, including the duty to act in good faith and to not mislead or deceive. Misinterpreting or ignoring the implications of the Act can lead to significant legal repercussions for the insurer and damage to its reputation. Careful judgment is required to ensure that the claim is handled efficiently while strictly adhering to the legal framework. The correct approach involves acknowledging the potential implications of the Insurance Law Reform Act 1977, ANZIIF, and seeking clarification on the policy wording and the insured circumstances before making a definitive decision. This demonstrates a commitment to acting in good faith, a core principle enshrined in the Act. By proactively seeking to understand the full context and potential legal obligations, the claims handler ensures that the insurer's actions are compliant and fair. This approach aligns with the Act's intent to promote fairness and transparency in insurance dealings. An incorrect approach would be to immediately deny the claim based on a superficial reading of the policy wording, without considering the broader context or the insured's explanation. This could be seen as a failure to act in good faith and could potentially mislead the insured about their coverage, violating the principles of the Insurance Law Reform Act 1977, ANZIIF. Another incorrect approach would be to proceed with settlement without fully understanding the policy terms or the insured's situation, potentially leading to an underpayment or overpayment, and failing to uphold the insurer's duty of care and good faith. A third incorrect approach would be to delay the claim excessively without proper communication, which could also be construed as a failure to act with reasonable expedition and good faith. Professionals should adopt a decision-making framework that prioritizes understanding the legal and contractual obligations first. This involves 1. Thoroughly reviewing the policy wording and the claim details. 2. Identifying any potential ambiguities or areas where the Insurance Law Reform Act 1977, ANZIIF, might be relevant. 3. Seeking clarification from the insured and relevant internal departments, e.g., underwriting, legal if necessary. 4. Making a decision that is both compliant with the law and fair to the insured. 5. Communicating the decision and the reasons for it clearly and promptly to the insured. Question 3. Strategic planning requires a claims handler to assess a situation where a policyholder reports the theft of a vehicle they recently purchased on a hire purchase agreement. The policyholder has been making payments for 6 months, but the finance company still holds legal title to the vehicle. The claims handler must determine the appropriate course of action to ensure the claim is handled in accordance with fundamental insurance principles. Which approach best reflects sound claims management in this scenario? Option A. Investigate the policyholder's financial interest in the vehicle at the time of the theft to determine the extent of their insurable interest and potential entitlement to indemnity. Option B. Advise the policyholder to contact the finance company to lodge the claim, as they are the legal owner. Option C. Accept the claim based on the policyholder's possession of the vehicle and their ongoing payments, without further investigation into their financial stake. Option D. Immediately reject the claim as the policyholder does not hold legal title to the vehicle. The correct answer is A. Investigate the policyholder's financial interest in the vehicle at the time of the theft to determine the extent of their insurable interest and potential entitlement to indemnity. Explanation. This scenario is professionally challenging because it requires the claims handler to balance the insurer's obligation to indemnify the insured with the fundamental principles of insurance law, specifically the principle of insurable interest and utmost good faith. Claims handler must ensure that the claim is genuine and that the insured had a legitimate financial stake in the insured item at the time of the loss, without unduly delaying the claims process or appearing to be obstructive. Navigating these principles requires careful judgment to uphold the integrity of the insurance contract and regulatory compliance. The correct approach involves a thorough but fair investigation into the existence of insurable interest at the time of the loss. This aligns with the principle of indemnity, which aims to restore the insured to their pre-loss financial position, and the principle of insurable interest, which dictates that the insured must suffer a financial loss if the insured event occurs. By verifying insurable interest, the claims handler upholds the principle of utmost good faith by ensuring the insurer is not paying a claim where no genuine loss has been suffered by the insured party. This process is crucial for preventing fraudulent claims and maintaining the financial stability of the insurance pool, as mandated by the principles underpinning insurance contracts in New Zealand. An incorrect approach that focuses solely on the insured's immediate possession of the item at the time of the claim, without investigating their financial stake at the time of the loss, fails to uphold the principle of insurable interest. This could lead to the insurer paying a claim where the insured did not actually suffer a financial loss, thereby undermining the principle of indemnity and potentially opening the door to fraudulent claims, which is contrary to the spirit of utmost good faith. Another incorrect approach that involves immediately rejecting the claim based on a perceived technicality, without a proper investigation into the insurable interest at the time of the loss, would breach the principle of utmost good faith. This demonstrates a lack of diligence and fairness towards the insured, potentially leading to a dispute and damage to the insurer's reputation. It also fails to properly apply the principle of indemnity by not assessing the actual loss suffered by the insured. A further incorrect approach that involves accepting the claim without any verification of insurable interest, simply because the insured is the current holder of the item, ignores the fundamental requirement of insurable interest. This can lead to the insurer paying out on claims where no genuine financial loss has occurred, which is contrary to the core principles of indemnity and utmost good faith, and could be seen as facilitating fraudulent activity. Professionals should adopt a decision-making framework that prioritizes a balanced and thorough investigation. This involves understanding the specific circumstances of the claim, identifying the relevant insurance principles, insurable interest, indemnity, utmost good faith, gathering necessary evidence to assess these principles, and making a decision that is both fair to the insured and compliant with regulatory requirements and ethical obligations. This systematic approach ensures that claims are processed efficiently and equitably, upholding the integrity of the insurance contract. Question 4. Benchmark analysis indicates that a significant number of new claims are being registered with incomplete or ambiguous details regarding the cause of loss. In this context, what is the most appropriate approach for a claims administrator to ensure accurate data entry and system registration of these claims, adhering to New Zealand regulatory expectations for insurance operations? Option A. Make reasonable assumptions to fill in the missing data fields based on common claim types to expedite the registration process. Option B. Immediately register the claim with the available information, flagging the incomplete fields for subsequent review and correction by a senior claims assessor. Option C. Attempt to obtain clarification from the claimant or relevant parties regarding the missing details before proceeding with registration. Or if immediate clarification is not possible, record the claim with clear indicators of missing information and a plan for follow-up. Option D. Register the claim with a placeholder for the missing information, assuming it will be provided later without actively seeking clarification at the initial stage. The correct answer is B. Immediately register the claim with the available information, flagging the incomplete fields for subsequent review and correction by a senior claims assessor. Explanation. This scenario presents a common implementation challenge in insurance claims processing, ensuring data accuracy and system integrity when faced with potentially incomplete or ambiguous information. The professional challenge lies in balancing the need for prompt claim registration with the imperative to capture accurate data that underpins all subsequent claims handling, regulatory reporting, and financial reconciliation. Failure to establish robust data entry protocols can lead to errors that propagate through the system, impacting customer satisfaction, regulatory compliance, and the insurer's financial health. The correct approach involves a systematic process of data validation and clarification before finalizing the claim record. This ensures that the initial registration is not merely a placeholder, but a reliable foundation for the claim's lifecycle. This aligns with the principles of good governance and operational efficiency expected within the New Zealand regulatory framework for insurance. Specifically, the Financial Markets Conduct Act 2013 FMCA and its associated regulations, while not detailing specific data entry fields for claim registration, mandate that licensed insurers operate with adequate systems and controls to manage their business effectively and meet their obligations to policyholders. Accurate data recording is fundamental to this. Furthermore, industry best practices, often reflected in internal company policies and procedures, emphasize the importance of data integrity for accurate claims assessment, fraud detection, and compliance with reporting requirements to bodies like the Financial Markets Authority, FMA, an incorrect approach that prioritizes speed over accuracy by accepting incomplete or potentially erroneous data without immediate validation risks significant regulatory and ethical breaches. This could lead to misclassification of claims, incorrect reserve setting, and inaccurate reporting to regulators, potentially contravening the FMCA requirements for sound financial management and conduct. Another incorrect approach, which involves making assumptions to fill data gaps, introduces a high risk of factual inaccuracy. This undermines the integrity of the claim record and can lead to incorrect decisions later in the claims process, potentially resulting in unfair treatment of the policyholder or financial loss to the insurer. Such actions could be seen as a failure to act with due diligence and care, which are core ethical expectations for financial service providers in New Zealand. The professional decision-making process for similar situations should involve a clear understanding of the insurer's established data entry policies and procedures. When faced with ambiguity or incompleteness, the professional should first attempt to clarify the information with the claimant or relevant parties. If immediate clarification is not possible, the system should be designed to flag the incomplete data for follow-up, rather than allowing it to be recorded as definitive. This prioritizes data integrity while still enabling the claim to be initiated. The guiding principle is to ensure that the claim record is as accurate and complete as reasonably possible at each stage of its life cycle, adhering to both regulatory expectations and ethical obligations to policyholders. Question 5. Research into optimizing the first notification of loss (FNOL) process for motor vehicle insurance claims in New Zealand has identified several potential strategies. Considering the regulatory framework and ethical obligations for insurance claims handling in New Zealand, which of the following strategies represents the most effective approach to ensure both accurate claim registration and positive claimant experience at the initial point of contact? Option A. Implement a system where claims handlers actively listen to the claimant, confirm understanding of the reported loss details, and clearly communicate the subsequent steps and information requirements for the claim. Option B. Train claims handlers to make educated assumptions about the loss based on common claim patterns to pre-fill information and speed up the FNOL. Option C. Advise claimants during FNOL that all information provided is preliminary and subject to extensive review, discouraging detailed explanations to avoid potential misrepresentation. Option D. Focus solely on rapidly capturing all reported details from the claimant with minimal interaction to expedite the registration process and reduce call handling times. The correct answer is A. Implement a system where claims handlers actively listen to the claimant, confirm understanding of the reported loss details, and clearly communicate the subsequent steps and information requirements for the claim. Explanation. This scenario is professionally challenging because the initial interaction with a claimant during the first notification of loss (FNOL) sets the tone for the entire claims process and has significant implications for regulatory compliance and customer satisfaction. The speed and accuracy of recording information are paramount, but equally important is the claimant's perception of being heard and understood, especially during a stressful event. Balancing efficiency with empathy is key. The correct approach involves actively listening to the claimant, confirming understanding of the key details of the loss, and clearly explaining the next steps in the claims process, including what information will be required and the expected timeline. This aligns with the principles of good customer service and the implicit duty of care insurers have toward their policyholders. From a regulatory perspective, the Financial Markets Conduct Act 2013 FMC Act and the Insurance Prudential Supervision Act 2010 IPSA, while not detailing specific FNOL procedures, underpin the expectation of fair treatment and efficient claims handling. The Financial Services Complaints Limited (FSCL) Code of Practice, which many insurers subscribe to, also emphasizes clear communication and timely processing of claims. By confirming understanding and outlining next steps, the claims handler demonstrates professionalism, builds trust, and ensures accurate initial data capture, which is crucial for efficient claims assessment, and avoids potential disputes or regulatory breaches related to misleading information or delays. An incorrect approach that prioritizes speed over understanding by interrupting the claimant and making assumptions about the loss is professionally unacceptable. This fails to meet the claimant's need to be heard and can lead to inaccurate record keeping, potentially causing delays and requiring further clarification later, which erodes trust and can be seen as poor customer service. It also risks misinterpreting the nature or extent of the loss, which could have regulatory implications if it leads to incorrect claim assessment or denial. Another incorrect approach, which is to simply record the information without acknowledging the claimant's distress or explaining the process, is also problematic. While it might capture the basic facts, it neglects the human element of claims handling. This can lead to a negative customer experience, potentially resulting in complaints to regulatory bodies or dispute resolution schemes. It fails to proactively manage expectations and can leave the claimant feeling uncertain and unsupported, which is contrary to the spirit of fair conduct expected under New Zealand financial services regulation. A further incorrect approach, which is to promise immediate resolution or compensation without proper assessment, is highly detrimental. This is not only unrealistic, but also creates false expectations that are unlikely to be met. It can lead to significant dissatisfaction, complaints, and potential breaches of regulatory obligations related to providing accurate information and acting with integrity. The professional decision-making process for similar situations should involve a structured approach. First, actively listen to the claimant without interruption, allowing them to fully describe the loss. Second, ask clarifying questions to ensure accurate understanding of the key details. Third, empathetically acknowledge their situation. Fourth, clearly and concisely explain the immediate next steps, what information is needed from them, and what they can expect from the insurer. Finally, confirm their contact details and provide a reference number for the claim. This process ensures both regulatory compliance and a positive customer experience. Question 6. To address the challenge of receiving a claim notification with some missing but crucial details and needing to register it promptly within the New Zealand regulatory framework, what is the most appropriate initial action for a claims officer? Option A. Register the claim with the available information and make a note to follow up with the claimant for the missing details at a later stage. Option B. Advise the claimant that the claim cannot be registered until all required information is provided and request they resubmit once complete. Option C. Register the claim with the available information, making reasonable assumptions to fill in the missing fields based on typical claim scenarios. Option D. Register the claim immediately, proactively seeking clarification from the claimant about the missing details to ensure accurate and complete recording. Correct answer is A. Register the claim with the available information and make a note to follow up with the claimant for the missing details at a later stage. Explanation. This scenario is professionally challenging because it requires an insurance claims officer to balance the immediate need to record a claim with the regulatory obligation to ensure all necessary information is gathered accurately and efficiently, while also considering the specific context of the New Zealand insurance market. The officer must navigate potential information gaps and ensure compliance with the Insurance, Prudential Supervision, Act 2010, and relevant industry codes of conduct, which emphasize fair treatment of customers and accurate record keeping. The correct approach involves proactively seeking clarification and additional details from the claimant to ensure the claim is recorded accurately and completely from the outset. This aligns with the regulatory expectation of diligent claims handling and the ethical duty to act in the best interests of the policyholder by facilitating a smooth and accurate claims process. It also supports the insurer's ability to assess the claim fairly and efficiently, minimizing potential disputes and ensuring compliance with reporting requirements. An incorrect approach would be to record the claim with incomplete information and assume the claimant will provide the missing details later. This fails to meet the regulatory standard for accurate record keeping and could lead to delays, misunderstandings, and potential breaches of fair treatment obligations. It also places an undue burden on the claimant to rectify errors later. Another incorrect approach would be to refuse to register the claim until all information is provided, without offering assistance or guidance. This could be seen as an unreasonable barrier to lodging a claim and may contravene the principles of fair treatment and accessibility expected within the New Zealand insurance market. A further incorrect approach would be to make assumptions about the missing information based on general knowledge of similar claims, without verifying with the claimant. This introduces a risk of factual inaccuracy in the claim record and could lead to an incorrect assessment of the claim, potentially disadvantaging the policyholder and the insurer. Professionals should employ a decision-making framework that prioritizes accurate information gathering, regulatory compliance, and customer service. This involves 1. Understanding the immediate requirement, recording the claim and the broader regulatory context, accurate record keeping, fair treatment. 2. Identifying any information gaps. 3. Proactively seeking clarification from the claimant, offering support and guidance where necessary. 4. Documenting all interactions and information received. 5. Escalating complex or ambiguous situations if required. Question 7. Analysis of a scenario where a policyholder, Mr. Henderson, contacts your insurance company to report damage to his property following a severe hailstorm. He provides a brief description of the damage, stating hailstones broke several roof tiles and a skylight. He mentions he is currently out of town and will return in a week, but wanted to get the ball rolling. The initial notification is received via email. What is the most appropriate immediate action for the claims handler to take? Option A. Immediately reject the claim as the notification is incomplete and lacks specific details regarding the extent of the damage and the exact number of broken tiles. Option B. Contact Mr. Henderson's neighbors to gather independent information about the extent of the damage to his property before responding to him. Option C. Acknowledge receipt of Mr. Henderson's email, confirm the initial details of the loss, and advise him that further information will be required upon his return, providing a clear outline of what is needed to progress the claim. Option D. Place the claim on hold and wait for Mr. Henderson to return before acknowledging his email or requesting any further information. The correct answer is C. Acknowledge receipt of Mr. Henderson's email, confirm the initial details of the loss, and advise him that further information will be required upon his return, providing a clear outline of what is needed to progress the claim. Explanation. This scenario is professionally challenging because it requires the claims handler to balance the insurer's need for timely information with the policyholder's right to a fair and efficient claims process, all within the specific regulatory framework of New Zealand insurance law. The core of the challenge lies in interpreting the notification of loss clause and determining what constitutes a reasonable and sufficient notification under the circumstances, without prejudicing the policyholder's claim. The correct approach involves acknowledging the notification received, even if incomplete, and proactively seeking the necessary further information from the policyholder in a clear and supportive manner. This aligns with the principles of good faith and fair dealing expected of insurers in New Zealand, as well as the practical requirements of the Insurance, Prudential Supervision, Act 2010, and the Financial Markets Conduct Act 2013, which implicitly require insurers to act with due skill, care, and diligence. Promptly acknowledging receipt and guiding the policyholder on what is needed demonstrates a commitment to processing the claim efficiently and fairly, thereby upholding the insurer's obligations. An incorrect approach that immediately rejects the claim due to minor omissions in the initial notification fails to uphold the duty of good faith. This could be seen as an unreasonable barrier to the policyholder accessing their entitled benefits and may contravene the spirit of consumer protection legislation. Such an approach risks damaging the insurer's reputation and potentially leading to regulatory scrutiny. Another incorrect approach that delays acknowledging the notification while the handler waits for more information is also problematic. This inaction can lead to the policyholder feeling ignored or that their claim is not being taken seriously. It can also result in the loss of crucial evidence or further deterioration of the insured item, which could impact the assessment of the claim and potentially lead to disputes. This passive stance does not reflect the proactive engagement expected of a claims handler. A further incorrect approach that assumes the policyholder is deliberately withholding information without any evidence is unprofessional and potentially discriminatory. This prejudges the situation and can lead to an adversarial relationship, which is counterproductive to resolving the claim efficiently and fairly. The professional decision-making process for similar situations should involve 1. Understanding the policy terms and conditions, particularly the notification clause. 2. Assessing the information provided against the policy requirements, identifying what is missing. 3. Prioritizing the policyholder's need for clear communication and assistance. 4. Adopting a proactive and supportive stance, guiding the policyholder on the next steps. 5. Documenting all communications and actions meticulously. 6. Considering the overarching principles of good faith and fair dealing inherent in New Zealand insurance law. Question 8. The investigation demonstrates a scenario where a claimant has experienced a significant loss involving damage to their business premises, resulting in a temporary inability to operate, and also a personal injury requiring medical treatment. The claimant holds a general insurance policy covering their business property and a separate health insurance policy. Which approach to registering and assessing this claim best aligns with the regulatory framework and ethical obligations for handling insurance claims in New Zealand? Option A. Register the claim solely under the general insurance policy, focusing only on the property damage and business interruption aspects, as this is the primary physical loss to the insured asset. Option B. Register the claim under both the general insurance policy for property damage and business interruption, and also initiate a separate assessment under the health insurance policy for the personal injury, ensuring all relevant policy types are considered from the outset. Option C. Register the claim under the general insurance policy and advise the claimant to lodge a separate claim directly with their health insurance provider without any further involvement from the insurer handling the initial claim. Option D. Prioritize the assessment of the property damage under the general insurance policy and defer the assessment of the business interruption and personal injury aspects until the property damage claim is fully settled. The correct answer is A. Register the claim solely under the general insurance policy, focusing only on the property damage and business interruption aspects, as this is the primary physical loss to the insured asset. Explanation. The investigation demonstrates a scenario where a claimant has suffered a loss that could potentially fall under multiple types of insurance. This presents a professional challenge because the initial assessment of the claim requires careful judgment to correctly identify the most appropriate insurance category and the relevant policy provisions. Misclassifying the claim can lead to delays, incorrect claim handling, and potential breaches of regulatory obligations and ethical duties owed to the claimant and the insurer. The correct approach involves a thorough risk assessment to determine the primary nature of the loss. This means analyzing the circumstances of the claim to ascertain whether the loss is predominantly related to damage to property, a personal injury or illness, or a life event. For instance, if a fire damages a home and also causes a temporary business interruption for the homeowner, the primary risk is property damage, which falls under general insurance. If the homeowner also suffers smoke inhalation requiring medical treatment, this aspect would be assessed under health insurance if a separate policy exists, or potentially as a consequential loss under the general insurance policy if covered. If the claimant tragically passes away due to the fire, the life insurance aspect would be triggered. The regulatory framework in New Zealand, as governed by the Financial Markets Authority, FMA, under the Financial Markets Conduct Act 2013, and related conduct of financial services obligations, mandates that insurers act with fairness, diligence, and integrity. This includes accurately assessing claims and applying the correct policy terms. Ethically, this ensures the claimant receives appropriate treatment and benefits under the correct policy. An incorrect approach would be to immediately assume the claim falls under a single, broad category without detailed analysis. For example, if the claimant has a general insurance policy for their home and also a life insurance policy, and the loss involves a fire that results in the claimant's death, simply processing it as a general insurance claim and ignoring the life insurance policy would be a significant regulatory and ethical failure. This would breach the duty to consider all relevant policy types and potentially deprive the claimant's beneficiaries of benefits under the life policy. Another incorrect approach would be to only consider the most obvious aspect of the loss, such as the property damage, and overlook secondary or consequential losses that might be covered by a different type of insurance. This demonstrates a lack of due diligence and could lead to underpayment or denial of valid claims, contravening the insurer's obligations. The professional decision-making process for similar situations should involve a systematic risk assessment. This begins with gathering all available information about the loss event. Then, the assessor must identify the potential types of insurance that might be relevant based on the nature of the loss, e.g., property damage, bodily injury, death, business interruption. Each potential insurance type needs to be evaluated against the specific policy wordings and the circumstances of the claim. If a loss event has multiple facets, it is crucial to determine the primary risk, and then assess any secondary or consequential risks that may be covered under different policies or different sections of the same policy. This methodical approach ensures that all aspects of the claim are considered, leading to accurate assessment and fair treatment of the claimant, in line with regulatory expectations and ethical conduct. Question 9. During the evaluation of a motor vehicle insurance claim, a claims officer receives a verbal update from the claimant regarding additional damage discovered after the initial assessment. The claims officer also has a brief discussion with a repairer about the estimated cost of parts. Which of the following methods best ensures that all communications and actions are documented in accordance with regulatory expectations for claims handling in New Zealand? Option A. Creating a detailed log of the verbal update from the claimant and the discussion with the repairer, including dates, times, and key points discussed, and attaching any relevant emails or correspondence to the claim file. Option B. Making a brief note in the file that a verbal update was received and a discussion with a repairer occurred without further detail. Option C. Relying on the claimant to provide written confirmation of the verbal update and assuming the repairer's estimate is self-explanatory. Option D. Recording only the final decision on the claim and the outcome of the repairer's estimate. The correct answer is D. Recording only the final decision on the claim and the outcome of the repairer's estimate. Explanation. This scenario is professionally challenging because it requires the claims officer to balance efficiency with thoroughness, ensuring that all interactions and decisions related to a claim are accurately and comprehensively documented. In the context of the ANZIIF Foundation Certificate in Insurance, New Zealand, CL1N002-15, the regulatory framework emphasizes the importance of maintaining clear, accurate, and complete records for all claims. This is not just good practice. It is a fundamental requirement for demonstrating compliance, facilitating audits, and ensuring transparency and accountability throughout the claims process. The core challenge lies in identifying the most effective method to capture all relevant information without creating an unmanageable or inefficient system. The correct approach involves systematically recording all communications and actions taken during the claims handling process. This means that every phone call, email, letter, meeting, and decision made by the claims officer, as well as any information received from the claimant or other parties, must be logged in the claim file. This ensures that a complete audit trail exists, which is crucial for regulatory compliance, dispute resolution, and internal review. The ANZIIF framework, by extension of general insurance principles and regulatory expectations in New Zealand, mandates that insurers maintain adequate records to demonstrate that claims have been handled fairly and in accordance with policy terms and conditions. This comprehensive documentation serves as evidence of due diligence and adherence to professional standards. An incorrect approach that involves only recording significant decisions or outcomes fails to capture the nuances of the claims process. This omission can lead to a lack of clarity regarding the rationale behind certain decisions, making it difficult to defend actions if challenged. It also fails to provide a complete picture of the interactions with the claimant, potentially leading to misunderstandings or disputes. Another incorrect approach, which is to rely solely on the claimant to provide all necessary documentation without the insurer actively recording their own interactions, creates an imbalance in the record keeping and can be seen as a failure to proactively manage the claim. Furthermore, an approach that prioritizes speed over accuracy in documentation, leading to incomplete or inaccurate entries, undermines the integrity of the claim file and can have serious consequences for both the insurer and the claimant. These failures can result in regulatory breaches, reputational damage, and financial penalties. Professionals should adopt a decision-making process that prioritizes a systematic and diligent approach to documentation. This involves understanding the regulatory requirements for record keeping, establishing clear internal procedures for logging all claim-related activities, and regularly reviewing the completeness and accuracy of claim files. When faced with a choice of how to document communications and actions, professionals should always err on the side of caution, ensuring that all relevant details are captured. This proactive and meticulous approach not only ensures compliance, but also builds trust and facilitates efficient and fair claims handling. Question 10. Quality control measures reveal that a claims officer has registered a motor vehicle insurance claim for theft without obtaining a copy of the police report, despite it being a mandatory document listed in the insurer's internal claims procedure and a key piece of evidence for verifying the theft. The officer noted in the system that the policyholder verbally confirmed the theft and stated they would provide the police report within 48 hours, which approach best aligns with the legal and regulatory framework in New Zealand for receiving and recording insurance claims. Option A. Register the claim as a conditional registration, indicating that it is subject to the eventual receipt of the police report to avoid delaying the initial recording. Option B. Place the claim registration on hold until the police report is received and verified, explaining to the policyholder the necessity of this document for regulatory compliance and fair claim assessment. Option C. Proceed with claim registration immediately, noting the policyholder's verbal confirmation and the pending police report to ensure prompt service. Option D. Register the claim and assess its validity based on the policyholder's statement, deferring the requirement for the police report to a later stage of the claims process. The correct answer is C. Proceed with claim registration immediately, noting the policyholder's verbal confirmation and the pending police report to ensure prompt service. Explanation. Scenario analysis. This scenario is professionally challenging because it requires the claims officer to balance the need for efficient claim processing with the absolute legal and ethical obligation to adhere to the Financial Markets Conduct Act 2013, FMC Act, and the Insurance Prudential Supervision Act 2010, IPSA. Misinterpreting or overlooking regulatory requirements can lead to significant consequences, including regulatory sanctions, reputational damage, and financial penalties for the insurer, as well as potential harm to the policyholder. The pressure to process claims quickly must not compromise the integrity of the regulatory framework. Correct approach analysis. The correct approach involves meticulously verifying that all required documentation, as mandated by the FMC Act and relevant industry codes of conduct, such as the Insurance Council of New Zealand's Code of Professional Conduct, is present and accurate before proceeding with claim registration. This ensures compliance with disclosure obligations and the duty of utmost good faith owed to the policyholder. Specifically, the FMC Act requires insurers to provide clear and accurate information, and this extends to the internal processes for handling claims. Registering a claim without complete information risks creating an inaccurate record, potentially leading to incorrect claim assessments or denials, which would breach the duty of good faith and regulatory expectations. Incorrect approaches analysis. Proceeding with claim registration without all necessary supporting documentation, even if the policyholder has verbally confirmed details, is a regulatory failure. This bypasses the established internal controls designed to ensure compliance with the FMC Act's requirements for accurate record keeping and fair treatment of policyholders. It creates a risk of incomplete or inaccurate claim files, which could be scrutinized by the Financial Markets Authority, FMA, during an investigation. Registering the claim based solely on the policyholder's assurance that they will provide the missing documents later is also a failure. While customer service is important, it cannot override statutory obligations. The IPSA mandates that insurers operate with prudence and sound governance, which includes maintaining robust internal processes for claim handling. Delaying the verification of essential information until after registration undermines this principle and increases the likelihood of errors or omissions that could impact the policyholder and the insurer's compliance standing. Accepting the claim as valid based on a preliminary assessment without the required documentation is a significant breach. This approach prioritizes speed over regulatory compliance and the duty of good faith. The FMC Act and IPSA expect insurers to conduct thorough assessments based on verified information. Registering a claim as valid prematurely, without the necessary evidence, exposes the insurer to potential misrepresentation and breaches of its obligations to act with integrity and in the best interests of its customers. Professional reasoning. Professionals in this role must adopt a systematic approach. Firstly, they they should clearly understand the insurer's internal procedures for claim registration, which are designed to align with regulatory requirements. Secondly, they must identify all mandatory documentation stipulated by the policy terms and conditions, as well as by the FMC Act and any applicable industry codes. Thirdly, they should conduct a thorough check of the submitted documentation against these requirements. If any documentation is missing or incomplete, the claim registration should be placed on hold until all requirements are met. Communication with the policyholder should focus on clearly explaining what further information is needed and why, framing it within the context of ensuring a fair and accurate assessment of their claim. This methodical process ensures both efficiency and robust compliance. Question 11. Market research demonstrates that customers involved in insurance claims often experience significant anxiety and uncertainty. Following a recent severe weather event that caused widespread damage, a homeowner has lodged a claim for significant property damage. The claimant is understandably distressed and eager for a quick resolution. As a claims handler, what is the most appropriate initial approach to manage this customer's expectations regarding their claim? Option A. Advise the claimant that the insurer will contact them once all necessary information has been gathered and a decision has been made, and to refrain from further inquiries in the interim. Option B. Provide a detailed overview of the typical claims process, including estimated timelines for assessment, decision-making, and settlement, while clearly stating that these are estimates and subject to the complexity of the claim and availability of information. Option C. Inform the claimant that the claims process can be lengthy and complex, and that they should not expect a swift resolution, without providing any further explanation or guidance. Option D. Assure the claimant that their claim will be prioritized and resolved as quickly as possible, without detailing the specific steps or potential timelines involved. The correct answer is B. Provide a detailed overview of the typical claims process, including estimated timelines for assessment, decision-making, and settlement, while clearly stating that these are estimates and subject to the complexity of the claim and availability of information. Explanation. This scenario is professionally challenging because the claimant is experiencing significant distress and uncertainty following a major event, and their expectations are likely heightened and potentially unrealistic due to their emotional state. The claims handler must balance empathy and support with the need to adhere to the insurer's policies and regulatory obligations. Careful judgment is required to provide accurate information without making promises that cannot be kept, thereby managing expectations effectively and ethically. The correct approach involves proactively communicating the typical claims process, setting realistic timeframes for each stage, and clearly outlining what information is required from the claimant. This aligns with the principles of good customer service and the regulatory expectation under New Zealand law for insurers to act with reasonable care and skill. Specifically, the Financial Markets Conduct Act 2013 FMCA and its associated regulations, including the Financial Markets Conduct Regulations 2014, mandate fair treatment of consumers. Providing clear, timely, and accurate information is fundamental to this. It also supports the Insurance, Prudential Supervision Act 2010, which requires licensed insurers to maintain sound risk management practices, including effective claims handling. By setting clear expectations, the insurer reduces the risk of future disputes and complaints, fostering trust and demonstrating a commitment to fair dealing. An incorrect approach that involves making vague assurances about a swift resolution without detailing the process or potential timelines is professionally unacceptable. This fails to meet the regulatory requirement for transparency and can lead to unmet expectations, dissatisfaction, and potential breaches of consumer protection provisions. It also risks misrepresenting the insurer's capabilities and the likely outcome, which could be seen as misleading conduct under the FMCA. Another incorrect approach, which is to provide overly optimistic timelines that are unlikely to be met, is also a failure. This creates false hope and can lead to significant disappointment and frustration for the claimant when delays inevitably occur. It undermines the insurer's credibility and can result in complaints to the Financial Services Complaints Limited (FSCL) or the Insurance and Financial Services Ombudsman Scheme (IFSO), depending on the insurer's dispute resolution scheme membership. A third incorrect approach, which is to avoid discussing timelines and the claims process altogether until all information is gathered, is also problematic. While thoroughness is important, a complete lack of communication about the expected journey can leave the claimant feeling abandoned and anxious. This passive approach does not demonstrate reasonable care and skill and can be perceived as poor customer service, potentially contravening the spirit of fair treatment expected of financial service providers. The professional decision-making process for similar situations should involve 1. Acknowledging the claimant's situation with empathy. 2. Clearly explaining the standard claims process, including key stages and potential durations. 3. Requesting necessary information in a structured manner. 4. Setting realistic expectations regarding communication frequency and resolution timelines, while also managing the possibility of unforeseen delays. 5. Documenting all communications and commitments made. 6. Regularly reviewing and updating the claimant on progress. Question 12. Comparative studies suggest that the initial steps in receiving and recording an insurance claim significantly influence claimant satisfaction and regulatory compliance. A policyholder contacts your insurance company to report a potential claim following a minor car accident. They sound distressed and are eager to understand what happens next. Which of the following initial actions best aligns with regulatory requirements and professional best practice for receiving and recording this claim in New Zealand? Option A. Advise the claimant that claims of this nature are typically complex and require extensive documentation, suggesting they gather all possible evidence before contacting the insurer again. Option B. Inform the claimant that you will process their claim once you have received a police report, without taking any initial details or offering immediate guidance. Option C. Immediately ask for detailed repair quotes and evidence of fault before logging the claim, explaining that this is necessary for a swift resolution. Option D. Acknowledge receipt of the claim, gather essential preliminary details such as claimant contact information, date and time of the incident, and a brief description of what occurred, and inform the claimant about the next steps in the claims process. Correct answer is C. Immediately ask for detailed repair quotes and evidence of fault before logging the claim, explaining that this is necessary for a swift resolution. Explanation. Scenario analysis. This scenario presents a common challenge in insurance claims handling, balancing the need for prompt action with the requirement for accurate information gathering. The professional challenge lies in ensuring that the initial receipt and recording of a claim, while aiming for efficiency and customer service, does not compromise the integrity of the process or lead to premature assumptions about liability or coverage. The urgency of a claimant's situation can create pressure to move quickly, but rushing without establishing a clear record can lead to errors, disputes, and regulatory breaches. Careful judgment is required to navigate these competing demands. Correct approach analysis. The correct approach involves acknowledging the claim, gathering essential preliminary details, and clearly communicating the next steps to the claimant. This aligns with the principles of good customer service and regulatory compliance. Specifically, it involves obtaining the claimant's contact information, a brief description of the incident, the date and time of the incident, and the location. This information is crucial for creating an accurate claim record, assigning a claim number, and initiating the investigation process. The Financial Services and Markets Act 2022, FSMA, and the Financial Markets Conduct Act 2013, FMCA in New Zealand, along with the Financial Services Complaints Limited, FSCL Code of Practice, emphasize the importance of fair, transparent, and efficient claims handling. Promptly acknowledging receipt and gathering initial details demonstrates adherence to these principles by ensuring the claimant feels heard and that their claim is being processed. It also establishes a clear audit trail for regulatory purposes. Incorrect approach is analysis. An incorrect approach would be to immediately deny the claim based on limited information or to promise a specific outcome without proper investigation. This fails to uphold the claimant's right to a fair assessment and breaches regulatory expectations of due process. Such actions could contravene the duty of care owed to the claimant and potentially lead to breaches of the FSMA and FMCA, which mandate fair treatment of customers. Another incorrect approach would be to delay acknowledging the claim or requesting further information, which can lead to frustration for the claimant and may be viewed as poor service, potentially violating the FSCL Code of Practice. Finally, an approach that involves making assumptions about fault or coverage before all facts are gathered is premature and unprofessional, risking incorrect decisions and potential regulatory scrutiny for unfair claims handling. Professional reasoning. Professionals should adopt a structured approach to claim receipt. This involves 1. Active listening and empathy. Acknowledge the claimant's situation with understanding. 2. Information gathering. Systematically collect the core details required to log the claim accurately. 3. Record keeping. Ensure all information is entered into the claims system promptly and accurately. 4. Communication. Clearly explain the next steps, timelines, and what the claimant can expect. 5. Regulatory awareness. Keep in mind the obligations under New Zealand legislation and industry codes of practice regarding fair and efficient claims handling. This systematic process ensures that the initial interaction sets a positive and compliant tone for the entire claims journey. Question 13. The performance metrics show a trend where claims handlers are registering claims very quickly, but a significant number of these initial registrations are later flagged for incomplete information, requiring follow-up and delaying the overall claims process. In this context, what is the most appropriate initial action for a claims handler when receiving a new claim notification? Adhering to New Zealand regulatory expectations for receiving and recording claims. Option A. Defer the claim registration until the claimant provides all potential supporting documents, even if the initial notification contains enough information to open a file. Option B. Actively prompt the claimant for all necessary details to establish a comprehensive claim record from the outset, even if it takes slightly longer to register the claim initially. Option C. Register the claim immediately with the minimal information provided by the claimant to meet speed targets and address any missing details later. Option D. Record only the claimant's name and contact details and await further instruction before gathering any claim specifics. Correct answer is B. Actively prompt the claimant for all necessary details to establish a comprehensive claim record from the outset, even if it takes slightly longer to register the claim initially. Explanation. This scenario presents a common implementation challenge in insurance claims processing, balancing the need for speed with the imperative for accuracy and completeness. The professional challenge lies in the inherent tension between customer expectations for prompt claim resolution and the regulatory and operational requirements for thorough information gathering. A claims handler must exercise careful judgment to ensure that initial information collection does not compromise the integrity of the claim record or lead to premature, potentially incorrect, decisions. The correct approach involves actively seeking and documenting all relevant details from the claimant and any other available sources at the earliest opportunity. This aligns directly with the principles of good faith and fair dealing expected of insurers under New Zealand law, including the Financial Markets Conduct Act 2013 FMCA and the Insurance Prudential Supervision Act 2010 IPSA. Accurate and complete information is fundamental to the insurer's ability to assess liability, determine the extent of cover, and ultimately provide a fair outcome to the policyholder. Failing to gather sufficient information can lead to underpayments, disputes, and reputational damage, all of which are contrary to the spirit and letter of regulatory expectations. An approach that prioritizes speed over completeness by accepting vague or incomplete information from the claimant is professionally unacceptable. This failure breaches the duty to act with reasonable care and skill, potentially contravening the FMCA conduct obligations. It also risks creating an incomplete or inaccurate claim record, which can hinder subsequent investigation and assessment, leading to potential breaches of policy terms and conditions, and ultimately, unfair treatment of the claimant. Another incorrect approach is to delay the claim registration process while waiting for all possible documentation, even if initial information is sufficient to open a file. This can lead to missed deadlines for communication and assessment, contravening regulatory requirements for timely claims handling and potentially frustrating the claimant. It also fails to establish a clear record of the claim's inception, which is crucial for audit trails and dispute resolution. The professional decision-making process for similar situations should involve a structured approach. First, identify the core objective, to accurately and completely record the claim. Second, consider the immediate information available and what is reasonably obtainable from the claimant at that point. Third, consult internal procedures and any relevant policy wordings to understand specific information requirements. Fourth, prioritize obtaining the essential details that allow for claim registration and initial assessment, while simultaneously identifying any missing information and planning how and when to obtain it. This ensures that the claim is progressed efficiently, without sacrificing the foundational requirement for accurate and complete data. Question 14. Investigation of a motor vehicle insurance claim for accidental damage reveals the insured stated the damage occurred while parked. However, The policy wording contains an exclusion for damage occurring while the vehicle is unattended and parked in a public place, unless specific security measures were in place. What is the most appropriate initial step for the claims handler to take to ensure regulatory compliance and accurate claim assessment? Option A. Immediately approve the claim as the damage is clearly accidental and the policy is active. Option B. Proceed with obtaining repair quotes and estimate the cost of repairs without further investigation into the policy's applicability. Option C. Request further details from the insured regarding the circumstances of the damage and cross-reference this information with the specific policy wording, including any relevant exclusions and conditions. Option D. Advise the insured that the claim is likely to be declined due to the exclusion for damage while parked unattended. The correct answer is A. Immediately approve the claim as the damage is clearly accidental and the policy is active. Explanation. This scenario is professionally challenging because the initial claim information appears straightforward, but a closer examination reveals potential discrepancies that could impact coverage. The core challenge lies in balancing the need for efficient claim processing with the regulatory obligation to accurately verify policy details and coverage before making any commitments or decisions. This requires careful judgment, attention to detail, and adherence to established procedures. The correct approach involves systematically verifying the policy details against the claim information and the policy wording. This includes confirming the policy was active at the time of the incident, that the insured event falls within the scope of the policy's coverage, and that any exclusions or conditions do not apply. This methodical verification is mandated by the principles of good insurance practice and regulatory expectations in New Zealand, which require insurers to act fairly and transparently with policyholders. Specifically, the Financial Markets Conduct Act 2013, FMC Act, and the Insurance Prudential Supervision Act 2010, IPSA, underpin the need for insurers to maintain robust internal processes to ensure fair treatment of customers and sound financial management, which includes accurate assessment of claims against policy terms. Proceeding with the claim without thoroughly verifying the policy details and coverage is professionally unacceptable. This approach risks misinterpreting the policy, potentially leading to an incorrect assessment of liability, overpayment of a claim, or denial of a valid claim. Such errors can result in financial loss for the insurer, damage to reputation, and breaches of regulatory obligations regarding fair treatment of customers. An approach that immediately accepts the claim based on the insured's initial statement, without cross-referencing against the policy schedule and wording, fails to meet the fundamental duty of care and due diligence expected of an insurance claims handler. This bypasses the critical step of confirming that the policy actually covers the specific loss described, potentially exposing the insurer to claims that are not contractually obligated. Another incorrect approach is to assume the policy covers the claim because it is a common type of incident, without actively reviewing the specific policy terms, conditions, and exclusions. This relies on assumptions rather than evidence, which is contrary to the principles of sound risk management and regulatory compliance. The policy wording is the definitive document, and its specific clauses must be examined in relation to the claim circumstances. The professional decision-making process for similar situations should involve a structured approach. 1. Acknowledge and record the claim promptly. 2. Immediately identify the need to verify policy details and coverage against the claim particulars. 3. Consult the relevant policy schedule, policy wording, and any endorsements. 4. Cross-reference the insured event with the policy's scope of cover, ensuring it is not excluded. 5. Document all verification steps and findings meticulously. 6. If any ambiguities or potential issues arise, escalate for further review or seek clarification from the policyholder or relevant internal experts. 7. Only proceed with claim assessment and settlement once coverage has been definitively established. Question 15. The control framework reveals that a policyholder has lodged a claim following a significant event that has caused considerable personal distress and financial hardship. The policyholder is urgently requesting immediate financial assistance to cover essential living expenses, while the full assessment of their claim is underway. Considering the broader societal role of insurance in providing financial security and facilitating recovery, what is the most appropriate initial response from the insurance administrator? Option A. Advise the claimant that while their situation is unfortunate, the insurer's primary responsibility is to its shareholders, and therefore, all claims will be processed strictly according to the most conservative interpretation of the policy wording, with no exceptions for urgent needs. Option B. Acknowledge the claimant's distress and urgent need, inform them of the next steps in the claims process, and advise on the expected timeframe for assessment, while also explaining that immediate financial assistance may be available subject to policy terms and a preliminary assessment. Option C. Immediately approve a substantial portion of the claim to alleviate the claimant's immediate financial hardship, without waiting for a full assessment, to demonstrate the insurer's commitment to supporting policyholders during difficult times. Option D. Inform the claimant that all claim assessments must be completed in full before any communication regarding potential payouts can occur, and that their request for immediate assistance cannot be considered at this stage. The correct answer is B. Acknowledge the claimant's distress and urgent need, inform them of the next steps in the claims process, and advise on the expected timeframe for assessment, while also explaining that immediate financial assistance may be available subject to policy terms and a preliminary assessment. Explanation. This scenario presents a professional challenge because it requires an insurance administrator to balance the immediate needs of a claimant with the broader societal role of insurance, particularly in the context of New Zealand's regulatory environment for claims handling. The administrator must ensure that the claim is processed efficiently and fairly, adhering to the principles of good faith and the specific requirements of the ANZIIF Foundation Certificate in Insurance. Societal role of insurance, which includes providing financial security and facilitating recovery after loss, is underpinned by regulatory frameworks designed to ensure consumer protection and market integrity. The correct approach involves acknowledging the claimant's immediate need for assistance, while also recognizing the insurer's responsibility to investigate the claim thoroughly and in accordance with policy terms and conditions. This aligns with the principles of good faith and fair dealing expected of insurers in New Zealand. The regulatory framework, while not explicitly detailed in the exam scope, implicitly supports a process that is both responsive and responsible, ensuring that claims are paid where due and that the insurer acts reasonably in all dealings. This approach upholds the societal function of insurance by providing a reliable safety net. An incorrect approach would be to immediately approve the claim without any investigation, solely based on the claimant's distress. This fails to uphold the insurer's responsibility to assess the validity of the claim against the policy and could lead to fraudulent claims being paid, undermining the stability of the insurance pool and the trust placed in the insurance industry by society. It also neglects the insurer's duty to its other policyholders, who ultimately bear the cost of unjustified payouts. Another incorrect approach would be to delay the claim excessively or refuse to communicate with the claimant, citing the need for extensive internal reviews. While thoroughness is important, an unreasonable delay or lack of communication can breach the duty of good faith and lead to significant hardship for the claimant, contradicting the societal purpose of insurance as a mechanism for recovery. This can also lead to reputational damage for the insurer and potential regulatory scrutiny. A further incorrect approach would be to offer a settlement that is significantly below the likely value of the claim, hoping the claimant will accept due to their urgent need. This exploits the claimant's vulnerability and is contrary to the ethical obligations of an insurer to act fairly and reasonably. It undermines the principle of indemnity, which is a cornerstone of insurance and its societal value. The professional decision-making process for similar situations should involve a systematic assessment of the claim against policy terms, a clear communication strategy with the claimant, adherence to internal procedures and regulatory guidelines for claims handling, and a commitment to acting in good faith throughout the process. This ensures that the insurer fulfills its societal role by providing a fair and efficient claims service. Question 16. The efficiency study reveals that the claims processing team is experiencing delays due to the time taken to obtain and verify health information from external medical providers. A claimant has lodged a claim for a medical condition, and the assessor believes that obtaining their medical records directly from their treating doctor is crucial for an accurate assessment. What is the most appropriate and legally compliant course of action for the claims assessor to take? Option A. Contact the claimant's doctor directly and request the records, stating that the insurer has a right to access this information to verify the claim. Option B. Inform the claimant that their medical records are required, explain why they are necessary for the claim, and seek their explicit, written consent to request these records from their doctor, outlining how the information will be protected. Option C. Immediately request the claimant's medical records from their treating doctor, explaining that this is standard procedure for claim assessment. Option D. Proceed with the claim assessment using only the information provided by the claimant, as they have not explicitly consented to the release of their medical records. Correct answer is C. Immediately request the claimant's medical records from their treating doctor, explaining that this is standard procedure for claim assessment. Explanation. The efficiency study reveals that the claims processing team is experiencing delays due to the time taken to obtain and verify health information from external medical providers. This scenario is professionally challenging because it requires balancing the need for timely claim resolution with the stringent privacy obligations surrounding health information under New Zealand law, specifically the Health Information Privacy Code, HIPC. The team must navigate these competing demands without compromising the claimant's rights or the insurer's ability to assess the claim accurately. Careful judgment is required to ensure all actions are compliant and ethical. The correct approach involves the claims assessor proactively and transparently communicating with the claimant about the necessity of obtaining their health information, clearly explaining what information is required, why it is needed for the claim assessment, and how it will be handled in accordance with the HIPC. This includes obtaining explicit, informed consent from the claimant before requesting the information from third parties. This approach is correct because it prioritizes the claimant's autonomy and privacy rights, aligning directly with the principles of the HIPC, which mandates that health information should only be collected, used, and disclosed with the individual's consent or as permitted by law. Transparency builds trust and ensures the claimant understands the process, thereby facilitating cooperation and potentially speeding up the claim. An incorrect approach would be to directly request the claimant's health information from their medical provider without first obtaining explicit consent from the claimant. This is a significant regulatory and ethical failure because it breaches Principle 11 of the HIPC, which governs the disclosure of health information. This principle requires that health information not be disclosed unless authorized by the individual or required by law. Such an action would constitute an unauthorized disclosure, potentially leading to legal repercussions and damage to the insurer's reputation. Another incorrect approach would be to proceed with the claim assessment using only the information provided by the claimant, without seeking necessary medical evidence, even if the claimant is reluctant to provide consent. While respecting the claimant's wishes is important, an insurer has a legitimate need to verify the claim. Failing to seek essential information, even after attempting to obtain consent, could lead to an inaccurate assessment of the claim, potentially resulting in an unfair outcome for the claimant or the insurer. This approach fails to adequately balance the claimant's privacy with the insurer's duty to assess claims fairly and accurately, and it does not demonstrate a proactive effort to obtain necessary information within legal and ethical boundaries. The professional decision-making process for similar situations should involve a clear understanding of the relevant privacy legislation, such as the HIPC. Professionals must prioritize obtaining informed consent from the claimant for any collection or disclosure of health information. If consent cannot be obtained, they should explore alternative legal bases for collection or disclosure, or consider how the claim can be assessed with the available information, while documenting all steps taken. Open and honest communication with the claimant throughout the process is paramount to building trust and ensuring a fair and compliant outcome. Question 17. The review process indicates that a policyholder has lodged a claim for damage caused by a sudden and unexpected water ingress event, which appears to be a consequence of a gradual deterioration of a pipe over time, rather than an immediate burst. The policy document contains a clause excluding damage caused by gradual deterioration or wear and tear. How should a claims handler proceed to determine coverage? Option A. Interpret the policy wording to consider if the sudden and unexpected nature of the ingress event itself, despite the underlying cause, could still fall within the spirit of the coverage, while acknowledging the exclusion for gradual deterioration. Option B. Assume the policy covers the event because the ingress was sudden and unexpected from the policyholder's perspective, regardless of the policy's specific wording. Option C. Immediately deny the claim based on the exclusion for gradual deterioration, as the underlying cause is clearly identified. Option D. Seek external industry guidelines on similar water ingress claims to determine coverage, without a detailed review of the specific policy wording. The correct answer is A. Interpret the policy wording to consider if the sudden and unexpected nature of the ingress event itself, despite the underlying cause, could still fall within the spirit of the coverage, while acknowledging the exclusion for gradual deterioration. Explanation. The review process indicates a scenario where a claimant has experienced damage that appears to fall outside the explicit wording of their policy. This presents a professional challenge, because the claims handler must balance the need to adhere to the policy contract with the principle of fair treatment of customers and the potential for ambiguity in policy language. The core of the challenge lies in interpreting the policy's terms and conditions in a way that is both legally sound and ethically responsible, considering the insured's reasonable expectations. The correct approach involves a thorough analysis of the policy wording, considering any relevant definitions, exclusions, and conditions. This includes examining whether the specific circumstances of the claim can be reasonably interpreted to fall within the scope of coverage, even if not immediately obvious. This approach is justified by the regulatory framework in New Zealand, which, through the Financial Markets Conduct Act 2013 and associated conduct principles, mandates that financial service providers act with fairness and integrity. Specifically, the duty to treat customers fairly requires insurers to interpret policies in a manner that is not unduly restrictive or technical, especially when the insured's reasonable expectations of cover are at play. This involves considering the policy as a whole and the purpose for which it was taken out. An incorrect approach would be to immediately reject the claim based solely on a narrow, literal interpretation of a single clause, without considering the broader context of the policy or the insured's reasonable expectations. This fails to uphold the duty to treat customers fairly and could be seen as a breach of good faith. Another incorrect approach would be to assume coverage exists without a proper review of the policy wording and the facts of the claim. This risks misrepresenting policy terms and could lead to incorrect payouts, potentially impacting the insurer's financial stability and its ability to meet other obligations. A further incorrect approach would be to rely on external information or industry norms that are not directly supported by the specific policy wording or relevant New Zealand legislation. This demonstrates a lack of diligence in applying the contractual terms and regulatory requirements. Professionals should adopt a decision-making process that begins with a comprehensive understanding of the policy document and the claim's circumstances. They should then consider how the policy wording applies to the facts, looking for any ambiguity or potential for reasonable interpretation that aligns with the insured's legitimate expectations. If there is doubt, seeking clarification from senior colleagues or legal counsel is advisable. The ultimate decision must be justifiable based on the policy contract, relevant legislation, and the principles of fair conduct. Question 18. The performance metrics show a high volume of claims requiring prompt processing, and a claim has been lodged with several unusual details and a history of previous, similar claims that were also settled quickly. The claims officer suspects potential fraud, but is under pressure to reduce the average claim settlement time. What is the most appropriate course of action for the claims officer? Option A. Process the claim as normal but make a mental note to monitor the claimant's future activity more closely. Option B. Escalate the claim to the insurer's fraud investigation unit for further review, providing all relevant details and noting the suspicious elements. Option C. Immediately approve the claim to meet performance targets and avoid potential customer dissatisfaction due to delays. Option D. Reject the claim outright due to the suspicious nature of the previous claims and the current details. The correct answer is C. Immediately approve the claim to meet performance targets and avoid potential customer dissatisfaction due to delays. Explanation. This scenario is professionally challenging because it requires an insurance claims officer to balance the immediate need to process claims efficiently with the critical responsibility of identifying and acting upon potential insurance fraud. The pressure to meet performance metrics can create a temptation to overlook suspicious indicators, but doing so carries significant consequences for the insurer, its honest policyholders, and the integrity of the insurance system. Careful judgment is required to distinguish genuine claims from fraudulent ones without unduly delaying legitimate payouts. The correct approach involves a thorough, systematic review of the claim documentation and circumstances, cross-referencing information where possible, and escalating any identified red flags for further investigation. This aligns with the principles of responsible claims handling mandated by the Financial Markets Conduct Act 2013 (FMC Act) in New Zealand, which requires financial advice providers, including insurers, to act in the best interests of their customers and to treat them fairly. Furthermore, the Insurance Prudential Supervision Act 2010, IPSA, imposes duties on licensed insurers to maintain sound risk management practices, which includes robust fraud detection and prevention measures. Ethically, failing to investigate suspected fraud undermines the principle of good faith that underpins insurance contracts and can lead to unfair outcomes for all policyholders through increased premiums. An incorrect approach that prioritizes speed over diligence by approving the claim without further scrutiny fails to uphold the insurer's duty to manage its risks effectively and could lead to financial losses. This directly contravenes the spirit of the FMC Act and IPSA by not acting prudently and potentially exposing the insurer to undue risk. Another incorrect approach, which is to dismiss the suspicion outright without any form of verification or escalation, is equally problematic. This demonstrates a lack of professional diligence and a failure to adhere to the insurer's internal fraud prevention protocols, which are implicitly required by regulatory oversight to ensure fair treatment of all parties and the financial soundness of the insurer. It also fails to uphold the principle of good faith by potentially allowing a fraudulent claim to proceed, which is detrimental to honest policyholders. A third incorrect approach, which is to delay the claim indefinitely without clear communication or a defined investigation plan, is also unacceptable. While investigation is necessary, prolonged, unexplained delays can be seen as unfair treatment of the policyholder and may breach the insurer's obligations under consumer protection legislation and the implied duty of good faith. The professional decision-making process for similar situations should involve a structured approach. First, thoroughly review all provided documentation against policy terms and conditions. Second, identify any inconsistencies, unusual circumstances, or red flags that deviate from typical claim patterns. Third, consult internal guidelines and fraud indicators. Fourth, if suspicions remain, escalate the claim to a designated fraud investigation unit or supervisor, clearly articulating the reasons for suspicion and the information gathered. Finally, ensure clear communication with the policyholder regarding the next steps and expected timelines for investigation, while maintaining confidentiality regarding the fraud investigation itself. Question 19. Assessment of how an insurance claims officer in New Zealand should approach the initial registration of a motor vehicle insurance claim, considering it was lodged through an online aggregator platform versus directly with the insurer via their website. Option A. The claims officer should follow a standardized claim registration protocol that captures essential details consistently, while being prepared to request additional information if the aggregator-provided data is incomplete, ensuring the registration process prioritizes accuracy and regulatory compliance regardless of the lodgement channel. Option B. The claims officer should assume that all data provided by an online aggregator is complete and accurate, and proceed with registration without further verification to expedite the process. Option C. The claims officer should prioritize the direct website lodgement process as the benchmark and treat aggregator lodge claims as secondary, potentially requiring more extensive re-verification. Option D. The claims officer should create a distinct and simplified registration process for claims originating from online aggregators, as these are typically less complex. The correct answer is A. The claims officer should follow a standardized claim registration protocol that captures essential details consistently, while being prepared to request additional information if the aggregator-provided data is incomplete, ensuring the registration process prioritizes accuracy and regulatory compliance regardless of the lodgement channel. Explanation. This scenario is professionally challenging because it requires an insurance claims officer to navigate the complexities of different insurance distribution channels in New Zealand, specifically in the context of receiving and recording a claim. The officer must understand how the origin of the claim, e.g., direct sale, broker, aggregator, might influence the initial information received and the subsequent recording process, while adhering to the principles of accurate and timely claim lodgement as mandated by New Zealand insurance regulations and industry best practices. The core challenge lies in ensuring that regardless of the channel, the claim is registered correctly, efficiently, and in a manner that upholds the insurer's obligations and the policyholder's rights. The correct approach involves recognizing that While the claim registration process should be standardized for accuracy and efficiency, the initial point of contact and the information provided may vary depending on the distribution channel. A claims officer must be equipped to handle these variations, ensuring all necessary details are captured, regardless of whether the claim originated from a direct customer interaction, a broker's referral, or an online aggregator platform. This approach aligns with the regulatory expectation of fair treatment of customers and the efficient administration of claims, as implied by the general principles of the Financial Markets Conduct Act 2013, FMC Act, and the Financial Services Legislation Amendment Act 2019, FSLA, which govern conduct in the financial services sector, including insurance. The focus is on the substance of the claim and the insurer's duty to process it appropriately, irrespective of the intermediary. An incorrect approach would be to assume that all claims, regardless of origin, should be processed identically without considering the potential nuances introduced by different distribution channels. For instance, if a claim comes through a broker, the broker may have already gathered and verified certain information, which could streamline the initial recording. Conversely, a direct claim might require more foundational information gathering. Failing to adapt the initial intake process to account for these differences could lead to inefficiencies, incomplete records, or a less than optimal customer experience, potentially contravening the spirit of fair conduct obligations. Another incorrect approach would be to prioritize the convenience of the distribution channel over the accuracy and completeness of the claim record. For example, if a claim is lodged via an aggregator, it might be tempting to simply accept the data provided without further verification, assuming it is complete. However, the claims officer has a responsibility to ensure the claim is properly registered, which may involve seeking clarification or additional details, even if the aggregator's platform suggests the information is sufficient. This could lead to regulatory breaches if insufficient information results in delayed or incorrect claim handling. A further incorrect approach would be to create separate, significantly different registration processes for each channel that deviate from core data requirements. While the asterisk method asterisk of initial data capture might differ, the asterisk essential information asterisk required to register a claim should be consistent to ensure proper tracking and assessment. Introducing vastly different registration protocols for each channel could lead to inconsistencies in data management and reporting, potentially impacting regulatory compliance and internal audit processes. The professional decision-making process for similar situations should involve a framework that prioritizes regulatory compliance, customer fairness, and operational efficiency. This includes 1. Understanding the regulatory landscape. Familiarize yourself with the FMC Act and FSLA and any specific guidance from the Financial Markets Authority, FMA, regarding claims handling and conduct. 2. Identifying the claim's origin. Determine the distribution channel through which the claim was received. 3. Applying a flexible yet consistent registration process. Have a core set of information requirements for all claims, but allow for variations in how that information is initially gathered based on the channel. 4. Ensuring data integrity. Verify the accuracy and completeness of the information received, regardless of the source. 5. Documenting the process. Maintain clear records of how the claim was received, registered, and processed. 6. Seeking clarification. If there is any ambiguity or missing information, proactively seek clarification from the policyholder or the intermediary. Question 20. Upon reviewing a new motor vehicle insurance claim, a policyholder expresses confusion about the financial aspects of their policy and the claim process. They ask for clarification on what they have paid to have the insurance, what they will have to pay towards the repair costs, what the document is that outlines their cover, what they are doing by contacting the insurer, and what the ultimate goal of the insurance is in this situation. Which of the following explanations best clarifies these concepts using key insurance terminology? Option A. The premium is what you pay for the policy, which is the contract detailing your cover. The deductible is the amount you contribute to the repair costs. Your claim is the formal request for compensation, and indemnity means we aim to restore you to your pre-loss financial position. Option B. The premium is what you pay for the policy, which is the contract detailing your cover. The deductible is the amount you contribute to the repair costs. Your claim is the formal request for compensation, and indemnity means we will pay the full repair cost. Option C. The premium is what you pay for the policy, which is the contract detailing your cover. The deductible is the total claim amount. Your claim is the formal request for compensation, and indemnity means we aim to restore you to your pre-loss financial position. Option D. The premium is the total cost of the claim. The policy is what you pay towards the repair costs. Your claim is the contract outlining your cover, and indemnity means we will pay the full repair cost. The correct answer is A. The premium is what you pay for the policy, which is the contract detailing your cover. The deductible is the amount you contribute to the repair costs. Your claim is the formal request for compensation, and indemnity means we aim to restore you to your pre-loss financial position. Explanation. This scenario is professionally challenging because it requires the claims handler to accurately identify and apply fundamental insurance terminology in a practical context, directly impacting the policyholder's understanding and the insurer's obligations. Misinterpreting these terms can lead to incorrect claim processing, customer dissatisfaction, and potential breaches of regulatory expectations regarding clear communication and fair treatment of policyholders. The claims handler must demonstrate a thorough understanding of the policy's terms and conditions, ensuring that the claimant receives accurate information about their entitlements and responsibilities. The correct approach involves clearly defining and differentiating the key insurance terms as they relate to the claimant's situation. This demonstrates adherence to the principles of clear and transparent communication expected under New Zealand insurance law and regulatory guidelines, which emphasize fair conduct and the provision of understandable information to consumers. By correctly explaining the premium as the cost of the policy, the deductible as the policyholder's contribution to a claim, the policy as the contract outlining cover, the claim as the formal request for compensation, and indemnity as the principle of restoring the insured to their pre-loss financial position, the handler ensures the claimant understands the basis of their coverage and the claim process. This aligns with the overarching goal of the ANZIIF Foundation Certificate in Insurance, which is to equip individuals with the foundational knowledge to effectively and ethically manage insurance processes. An incorrect approach that conflates the deductible with the total claim amount fails to recognize the deductible as a fixed or variable amount the policyholder is responsible for, not the entirety of the insurer's payout. This misunderstands the principle of indemnity and can lead to the claimant expecting full compensation when a portion is their responsibility. Another incorrect approach that equates the policy directly with the claim payment overlooks the fact that the policy is the contract that enables a claim, but it is not the payment itself. It defines the terms and conditions under which a claim can be made and paid. This demonstrates a superficial understanding of the insurance lifecycle. A further incorrect approach that uses premium interchangeably with indemnity is fundamentally flawed, as the premium is the cost of the insurance cover, while indemnity is the outcome or benefit provided by the policy when a valid claim is made. This confusion can lead to significant misunderstandings about the value and purpose of the insurance purchased. Professionals should adopt a decision-making framework that prioritizes accurate terminology and clear communication. This involves 1. Understanding the claimant's query and identifying the specific terms they are struggling with. 2. Recalling the precise definitions of key insurance terms as per industry standards and regulatory expectations in New Zealand. 3. Articulating these definitions in simple, unambiguous language, tailored to the claimant's situation. 4. Cross-referencing these definitions with the specific policy document to ensure accuracy and context. 5. Seeking clarification from senior colleagues or technical experts if any term or its application is unclear.